Welcome, guys. Welcome back. Hope everyone had a great weekend. We're going to get into these stock charts, try to figure out where things are going, and try to figure out what's going on here. So let's just jump right into it, get right to the point. Let's dig in. Triple Qs. So this is the one that everyone needs to pay attention to. Really, I think that's at this point kind of all you need to pay attention to. Not really. I mean, you always need to pay attention to everything. That's important. But the thing is that there's basically 5 stocks that are moving this market. Here's my NASDAQ, if I can get that over there. There's my heat map. And yeah, you had healthcare move. So that contributed to some gains today. But basically, FAANG. All right, you got Amazon, Google. Facebook's not really participating too much today. Microsoft and Apple. And those are the big players in the S&P 500 and the triple Qs. I think those 5 stocks make up over 50%, 50% of the Qs. So that's all that really matters, basically, is those stocks when it comes to where things are heading. And when you look at the market, the Qs was up today, but if you look at just the general market, it was basically flat. Look how the Dow closed. Dow closed down. S&P flat, NASDAQ, obviously was up, Russell was down. So pretty much everything was flat to down except for the NASDAQ. So just kind of goes on to show that the only thing that's really moving this market up right now is the FAANG stocks. It's everybody's favorite, so that's why it's really important to watch. So let's get into it. All right, look at this. Qs is just walking this uptrend line on the hourly chart. If you zoom out, I can show you, here is the bottom of the bottom back there in March, and we were moving higher on the hourly chart. We broke down, and then we created the second trend line that it's basically been robotically running up like a computer. Let me just zoom in. You can see right there. It's just, it's not really impulsively moving up above it, but it's not breaking down. It's just literally just grinding higher. Okay, so what does that tell us? A couple things that I'm reading. Again, the same thing is going on today that was on Friday. We've entered the gap here. This big gap that was put back in near the highs when we crashed back here. We created this big gap. And I think this was on a Monday. I remember this day exactly because I was short. I got short on the breakdown up here. And the market gapped down out of the blue, down 1,000 points. And that was what started this whole sell-off, really got people, kind of caught people off sides. And this is the gap. So we've entered the gap. Going back here, we've entered the gap here on the triple Qs. But it's not impulsive. That's what I want to point out. Everyone, yes, price is moving higher. Price is truth, of course. But look at the volume on the daily. And it's just really low volume. We haven't seen this kind of low volume. Last time we saw it was back here near the highs. So, yes, price is moving higher on low volume. And to me, I just don't trust this move. And the reason why, it's not so much the low volume. I want to continue to reiterate this. Yes, markets can move higher on low volume. I understand that. And that is not what I'm saying. What I'm saying is moving higher on a breakout level like this gap, you entered the gap and started to move into the gap on low volume. It was not impulsive. And that is suspect to me. It basically, when you have a breakout into a major watch level and there's no participation on that break higher, I can't jump on board. I can't trust it. So again, I'm still short. Basically when you look at the day, here's the hourly chart. Look where look how much we moved from the close on Friday. We closed up. Sorry, that's not it. Right here. I got to get into the 5-minute chart here to show it. Right there. We closed. Sorry, it's not. It's so thin, and it's not. We didn't close that much higher. We closed a 0.87%, I think, roughly from the from the close. So yeah, moved higher, but it's just not that impulsive. So again, that's all I want to point out. When you have something grinding higher, especially on a breakout level with no volume, just be on watch for a reversal. If you're long, I think you could stay long. I mean, I'm not long. I'm short. I'm going to stay short for now until I see volume come in, something to tell me that I'm just completely wrong. Price moving against me is not enough, even though, yes, price has moved against me and, I'm taking on some losses. I'm not seeing market consensus in this move. So tells me we're going to get some sort of a move down, and I just have to kind of hang tough. Now, if we start to get a move up higher and I start to see volume coming in, then that is consensus with the market moving higher. I think that's institutional participation thinking the market's going to move higher. If I see that, that will definitely do some damage to the bearish thesis. But while I see markets moving, gapping into, grinding into this major zone right here on really low volume, that just tells me there's no market consensus. That tells me that the market thinks that, possibly we're going to go down. So what am I looking for? Well, I'm looking for a break of this trend line right here, and I'm looking for volume. So a break of this level and volume confirming. That's what I'm looking for. Look at the SPY chart. SPY, if you look at today's price action, we basically closed flat. Look, so the market is kind of doing a whole lot of nothing. Yeah, technology is moving higher, but the general market, the whole market is not doing anything. And so you can see on Friday we moved higher, we closed. Today we kind of moved up and then moved down, closed flat. So again, just something to look at. And then also look at the volume. Now, the thing that I see on the SPY though, there is the potential for the SPY to move higher even on low volume. So there's nothing here in the SPY that I see that's telling me that this has to be an area where it's going to reverse. It could easily move up to this level 302, and I get that back here. You can see we had a couple reactions around that level there, a little cluster of reactions here. So we could move higher. The market could move up there. I don't see anything necessarily stopping it from doing that, even on low volume. So that's a possibility. But the thing is that the Qs is in this zone right now where to me, it seems like this is the area where it's going to reverse. We could hit the top of the gap, even overshoot it maybe. If it's on low volume and there's no participation, then maybe that's the end of this run. But again, what I'm going to continue to go with until I'm proven wrong, which could be in the next couple days actually, I'm going to continue to think that we're not going to fill this gap. I think it's going to make it look like it's going to fill the gap, and we're not going to actually fill. We're gonna stop somewhere right around here and head lower. So until that happens, it's the trend is up and it's grinding. But so if you're long, you could stay long. I personally wouldn't take out a new long position or start a long position, even though the market's moving higher. I don't chase markets. If a market moves without me and I haven't jumped on the move, I don't chase. Typically what I do is look for an opportunity to fade the move or have a counter trend move. If something's already moved without me, then just let it run and let the FOMO people jump on that. They're usually the ones that become the bag holders. I usually look to fade those moves. So that's just my trading style. And I typically do a lot better when it comes to those kind of setups. So those setups take patience. That's the thing. When you're trading, when you're looking for the next big move down and you're trading kind of a momentum FOMO move, it can continue to move against you on low volume, and you have to have some patience in order to catch the big moves. It's a lot like what was happening up here. Right up here in the Qs, you can see we continued to grind higher, not impulsively, just continued to grind higher on if I go to the daily, you can see right here we were just moving higher on really low volume, and the move kept going against you a little bit, but there wasn't a lot there, and then you could catch this huge move down of 30%. So I don't know if that's how it's going to play out, but to me it looks like a pretty good risk reward setup to, very similar to what we had going on right here, where we had a grinding action higher on low volume, and that's what we're seeing again, moving higher on low volume. And to me, it's set up to make another big leg down, although it's not doing it yet, and it will continue to, still in an uptrend. So that's all I have to say about that. Let's look at the healthcare sector. Here's the healthcare sector. Didn't do anything today. Just moved right up to resistance. So even though the Qs and even the two sectors that were moving higher today, where it was technology and healthcare, all healthcare did was move right up to resistance. There's nothing technically, technically nothing has changed here. We're just sideways. So even though it was a bullish move today, the bigger picture trend is still flat, and the trend beyond that is still bearish because you had this bearish rising wedge. You broke down, and now you're trading flat. So just keep that in mind. A couple things. Apple, I did close out my Apple short position on Friday. The reason why is that, we're moving up and just grinding higher. And I wanted to lighten some exposure on these FAANG stocks. I've got a decent position on Qs, and I was looking for a move down in FAANG. We didn't get it last week, and so I decided to lighten the direct exposure to FAANG, even though Qs is heavily weighted to FAANG. That's enough exposure for me on the Q. So again, risk management, just lightening up there and, taking a small loss on that. Nothing huge, but I did lose. Let's see what I lost. When I look at it, I basically got into it right around here. So I lost about 5% on that position. I closed it on Friday. I entered the trade right here when it broke higher, and I closed it on Friday. So lost about 2%, roughly 2%. Just want to update everyone on that. So I'm still short triple Qs, so which means I'm still short Apple. I'm just not directly short Apple anymore. And then I also closed my Tesla stock just because, that one wasn't. It's kind of going sideways. It's just not really doing what I'm looking for. So I need to see a little more signs, a little more evidence that there's going to be a drop. I am looking for this gap fill, but it wants to just continue to chop sideways. So I need to see something in the markets that tells me maybe tech is done rallying. And then if I can see that tech is done rallying, then we should see Tesla come down here and do a gap fill down to 650. So I think that's a very probable move. It's just, when does it happen? Do we move higher first and then come down? It's impossible to know. And the levels in Tesla right now are a little murky. So just because I didn't feel comfortable with the price action that I saw and the levels kind of chopping around, it's gotten the chart's just too messy for me to trade against. So don't want to be in something if I don't see a clear level or see clear evidence as to why I'm in the trade. And that's why I am out of this one. Okay, guys, so that's really it. Just here's the Q chart. Just watch the Qs. I think where tech goes, the market's going to go. So looking for a breakdown. I think we're going to get it very soon. And the reason why is that the price is moving up on really thin volume. So again, all it takes is one bad headline or something to come out. Basically, the market for the major institutions to just smash the market down with volume. And there's no volume to hold that up, to battle that. The volume right now is really thin to the upside. So anything negative on big volume, and there won't be much of a fight, it should sell off. So I don't know if we're going to get it, but again, this is the area where I think we would get it. So this is how you trade short, especially when you're looking for a big move. You have to kind of start to anticipate the big move ahead of the move, and then when you realize that you're wrong, just cut your trade short. So again, that's kind of where my head's at right now. So something will change. I'll either be proven wrong shortly or proven right pretty soon. I think it's set up to make a move here pretty quickly. So thanks, guys. Thanks for watching. Give me a thumbs up. Leave a comment below. What do you guys think? Am I wrong? I mean, clearly I'm wrong in the short term because we've been grinding higher. But are we basically, are we in a V bottom recovery, or are we in a bear market rally? What's your evidence behind that? Do you have technical evidence behind it? Let me know what you guys see. Talk to you guys later. Thanks. Bye.